Hey guys, Doug the Retirement Guy here. First, I want to say thank you for everybody who has subscribed to our channel. It continuously grows. We appreciate that. We love the clicks that you guys are giving us, and we definitely love the comments you're giving. Really helps the channel. If you want to continue helping the channel, click down below. You'll see support the channel. We're just asking for a little bit from Patreon. Real simple. Click on that. $2, $5, whatever you can do to help the channel. We appreciate it. We have an update today of an ETF that we did back about 3-4 months ago. The Yield Max NFLY Option Income Strategy ETF. If it was good for a retirement account, and with the today's world, stock market going crazy, we want to see, is this thing holding up or should we get out? 2 months ago, we gave this fund a good thumbs up. It produced a 47.19% dividend return, which were some great numbers, and it had a stock value of 1.69. And this is the one that always worried me, because 1.69 value over 12 months is not a lot. So this gave us a 48.88% gain. This really told me that this thing is about an income generating ETF and not a growing ETF. But I've always said, if you have a great dividend paying out, getting good income, you can take a little bit of a loss because you're making so much more up. But in this one here, with the way the market is, I question if that 1.69 is enough to make up the difference. We gave this thing a buy rating, and now that we've had 2 bad months in the stock market, with the S&P being down 10%, NASDAQ being down 16%, we wanted to see how this stock is really performing. To give you guys a recap of NFLY, the Yield Max version. This is the only Yield Max fund that I've ever given a thumbs up to, because they've always underperformed. They've never done what they've said they were going to do. And this fund here, again, we get into it, does not invest directly into Netflix. You know, they do the options call. They're doing a different type of program by not really investing in Netflix. They still show a 46.23% dividend rate, which is definitely down from when I first ever seen this thing of over 30 points. Their SEC yield is still at 3.58, but their expense report's still at 0.95. And here's the thing. To get that 3 percentage points in the 30-day yield, it really comes from, if you look at this, the treasury bills, the treasury bonds, everything done in the government side of it. They have millions and millions of dollars tied up in the government treasuries. This is the interest that they're getting that helps pay a lot of the dividends that they've been paying out. So we did a little report here. If you look at in February versus April, 1 month they were up 8.16 in February, 20.93 in 3 months, 45 in 6 months, 8.16 in year to date, and 62% in 1 year. When we switch up and just add a couple months to this, you see the 1 month down 4%. Does not shock me, because the market has been this way. 3 months they're down 3.22. Again, you got a bad March, you got a bad April. 6 months they're holding at 25.08, which is a 20% drop. They have a 3.2% year to date, which means they've had a 5% drop since February, and they're at 44%. So the numbers are definitely coming down. And again, will the 1.68% hold, or is it just, out of whack? So what we did is we put this into our $10,000 program, the NFLY past 12 months. We've added 2 months to this to give you guys a look at it. So that $10,000 that we invested, now 14 months into this, we have lost 11.9%. If you look at this, realistically, we'll look at is January, we saw a major drop of $3 per share. It came back in February, so we thought it was just a blip on the map. But in March and April, it's dropped back down to those rocket bottoms, 16.08 and 16.20 respectively. So in April, we're starting to see a little grind back, but we're just not enough to get us anywhere close. So we're losing 11%. Now the dividend side, they're holding tight. They're continue cranking out the dividends. It still comes in at 44.39% or $4,400. So it gives us a total return of 32.49% or $5,629. So again, back to what I said. Income generating, phenomenal. Growth value, non-existent. So the return on investments from NFLY before March and after March, if you look at the dividend, it's actually dropped 47.19 to 44.39. I was a little disappointed with that you're starting to see a drop in the dividend side of it as well. The stock market return, of course, 1.68 to negative 11.9. Huge drop off. So not real pleased right now with what I'm seeing out of this fund. Even though it still pulls a 32.49% return over 12 months, I'm impressed. But when you start looking at, again, 11% loss in your NAV, and now I'm starting to see dividend drop a little bit, it's kind of one of these things of which direction are we really heading? And how is this thing going to turn itself around, especially when Netflix is still doing great and not really being affected by any of the tariffs? So it shows that it's following the market. As the market drops, this thing drops. If the market comes back, we'll probably see this thing come back as well. Doing this into a bar graph, which is trying to give me a better answer of what's going on here. But if you look at the first one, and this is before March, the stock was doing I call it fairly flat to finally had some activity here in late November, early December, bouncing around. Then we had that November or the January drop off, and then it started rocketing back. So the average price before March was $17.62. Our current price rate at that time was $18.70. So they were a plus 6% above average. Now we get into the last 2 months that we've added to this, and you can see where the last hurdle was made, dropped off in March, plateaued in April, and it dropped the average price a little bit to $17.41, but now you're almost 7% below average with the current price of $16.20. So in this, it's telling me, okay, you got a 7% discount off of the average price. So it's probably hit somewhat of a rock bottom. The way this fund has continuously stayed above that $15 price point. So I'm more content that this thing is stabilized, but now are they going to get their act together and get it growing again? So the NFLY summary, stock return, 12 months was 1.68%. Now this is where the change comes in. We're going to call we're a little wishy-washy. We don't know yet. The dividend return of 47.19, and this is what we're going to watch, $8.68 per year. We give that a thumbs up, and the stock return of 48.88% was a thumbs up. Now, when we get into the 14 months marker, this thing is down 11.9%. That's where the wishy-washy comes in. That's where the, I just don't know. So realistically, I put this more of, we want to say, as a hold right now, because we got to see where this thing's heading over the next couple months. We also see the drop. There's about a 52-cent drop in the dividend payment over 12 months. Now, most people will say not a huge number, but man, if we're not a income generating fund and we are not growing, why do we want to be into this fund in the first place? 32.49% total return with dividend. So is this good for a retirement account? I'm still on the point of saying yes, even though you can tell the negativity in my tone and that we're questioning this. But right now, I'm still at a yes for a couple things. And I'm actually calling a moderate buy. And the reason for it is the 44.39% dividend is holding okay. It's holding well. That's some big numbers. It's very hard to find a fund that I can go back to over a period of time and find it. We're still holding in the plus 40s. The 11% drop over the past 2 months, again, is market bound. Market has done exactly this, so it hasn't done bad. So my question comes into, is YieldMax going to make some changes that this thing can start aggressively growing? We just did a review on NFLY, Curve's yield premium strategy for Netflix, and they've straightened it out in less than 30 days. They were able to regain their traction and take off. The question is YieldMax going to do the same thing? So we put this as a buy, plus we're getting a 7% discount off of the average price. So I believe with Netflix not moving much in the negative zone, but raising their price throughout this troubled times that we have, I believe this at a 7% drop and still getting a 44% is a time to get involved into it. That's why I put it as a yes, and I call it as a moderate buy. Guys, it's Doug, the retirement guy. If you like what we're doing, give us a like button. Just real simple. Click on it after you watch the video. If you're not a subscriber, we welcome you to the channel. Come on board, hit that subscribe button. And if you like or dislike anything I just did with this video, tell us. We want to hear from it. Everything helps the channel grow. We thank you, and we'll see you at the next video.